Hey everyone, it's Ed Kime, CEO over at Quantcha, and welcome to the June 21st, 2015 News and Updates video. In this video, we're going to talk about customizable option strategies. This has been a feature that's been requested for a long time, really since we launched, which is the ability for you to plug in any arbitrary option strategy you have for an expiration and to get all of our trade analysis tools to take a look at it for you and give you an idea of the payoff, the pitfalls, and the opportunities. Now, there are two ways to get into the customizable option strategies. The first is the blank slate approach, where you basically select the I will have a custom strategy from our strategies drop down. And the other one is to be able to customize a specific trade idea that Quantcha has presented. So let's jump over into the user experience, and we're at quantcha.com. And I'm just going to use Microsoft here. And we dive into Microsoft and we can see the expirations that are coming up. And I'm going to just pick this one expiration right before earnings. And so let's say we select that, which is the July 24th, and I'm going to hit my strategies drop down. You can see we have this new I want to use a custom strategy option. So if we click that, it brings us to a view of the stock. This is a trade that's been set up for us where we just have simply to buy 100 shares. And you can see the review for that, but realistically, let's say we want to do something a little more complex. We're going to clear that out. We're going to add an option leg where we say we want to buy, let's say we want to buy some 45 calls, and I'm going to add another option leg where I want to sell 3 at, let's say, 47, and then I'm going to add an option leg where I want to buy, I don't know, I'm going to arbitrarily say 5 more options at 50. So this is a 1-3-5 ratio spread, or rather a ratio trade here. We're doing, it's all calls. Obviously, we could change this to puts or whatever we want, and you get an idea from this drop down when you see the strike price, the type of the option, and then you get the bid and the ask. So you're able to use that to sort of gauge as you want to tweak it on the strategy. When I click apply, it's going to run through, analyze that, give me the same view that I get from before. It's all the same user experience, and now I get the chart that represents the P&L for the trade that we're looking at here. Not a particularly good trade. I'd actually recommend starting with a trade that's recommended and then tweaking it from there. But let's say, I've got a great idea and I'm saying, oh, you know what, I bet if I shorted 200 shares of stock and I bought, I set up this option strategy and I also wanted to sell, let's say, 4 contracts, let's say 4 put contracts at 42, and we apply that. I mean, you can start to see that the charts really do adapt. And it's also interesting because we do detect, for example, in your short stock, and in this case, it's not a net short. We do have the calls to cover it, or rather, the calls are protecting that from an unlimited downside. But in this particular case, because you are short the stock, if you're holding it through a dividend, we do calculate the dividend being used against you. So, in other words, you'll owe the dividend to the original owner, so that it gets factored into the risk basis, or rather it gets factored into the potential result, even though the risk basis does not include that if the risk basis is purely based on margin for the actual at the money price right now. But we can add any number of arbitrary trades here. We can continue to go up the chain and just pick pick some random, let's say 47 and a half. We'll add another one where we'll sell 3 or we'll sell 4 51 calls, and as we go out and we run through that, you can see it all gets factored in. This time we have unlimited risk because of the nature of the trade. We can see what the P&L looks like. You can sort of see what that full implied range is. I mean, you can really dig into lots of cool opportunities. This trade actually looks pretty reasonable if you're going to be bullish on the stock, even though there is the potential for that uncovered risk at the end. But anyway, this gives you an idea for that. Now, just as realistic though is perhaps what you're doing is you're looking at a particular trade idea, and we'll pop back over and we'll pick this long iron Condor. Now this Condor comes in, it's got some good information for us, but you might look at this trade, for example, and say, I'm a little bit hesitant to be so aggressive on the downside. Maybe what I want to do is I want to customize this strategy, and I'm going to take this 45 put that we're selling, and instead I'm going to sell a 44 and a half put. I'm just going to kind of slide this down a little bit, and that'll impact the whole P&L for us. So when we apply that, we can see that the chart actually looks a little bit different now, and we can see that the range gives us a little more room for downside movement to stay profitable. And maybe as part of this, I say, yeah, I'll do that, but I'll also buy 100 shares, and instead I'm going to sell, maybe I'll sell 2 of these calls. So I'm going to buy these shares, then cover it, or whatever. I mean, just kind of proving the point here that you can get into all kinds of neat and interesting scenarios really to do whatever it is that you want to do to find the trade that fits for your particular view. A key thing is that as we are in this custom view right now, we're using a custom option strategy. We are still bound to the budget, or rather we still employ the budget. So in this case, when you customize the strategy, just customize the base ratio you want to work with. Don't worry about the number of legs. So in this case, we're looking at a debit to get into the position of this amount, but we also have liabilities that are this amount. So the liability is actually greater than the debit in this particular case. If we put ourselves in a position where, let's say we said we had $100 budget, which is of course unrealistic, it'll still model the trade for us, but it'll say that the budget, the minimum investment is more than the budget here because we're modeling that. You could still place the trade if you were using a supported brokerage, but we're kind of laying that out for you. Now at the same time, let's say you were looking at making a big investment here. We'll put 100,000 in place there. As you apply that, you can see we'll actually multiply those legs out for you. So in this case, it's by a factor of 21. So if you were customizing it, you wouldn't have to worry about that. And at the same time, if you wanted to just get rid of some of these legs, let's say, for example, you put in, for whatever reason, 3 and 600, what we would do there, and let's say this was a sell, we'll actually go in and we'll understand the way that trade looks is actually a 200 to 1 for the shares to the options. So Quantcha tries to do some of the work for you to optimize the trading that you're looking at here. In this case, there was a factor of 10 to 1 for that ratio, and we do the math for you so you don't have to worry too much about it. But that's a quick tour of the trade customization. We are working on some more cool stuff, and as always, if you have any ideas, please hit us up at hello@quantcha.com, or leave a comment down below, or check out the user voice site where we're pulling a lot of our ideas from and making sure we keep up to date. Anyway, hope things are going well for you. Happy trading.